the stocks. Now, overnight, we got news about the amalgamation of Hinduja Foundries with Ashok Leyland. It was announced overnight. It put pressure on both those two stocks. In fact, Hinduja Foundries has been locked in lower circuit. But Sonia tracks that space very closely. She's joining in with all the key takeaways from the con call. Sonia?
Well, thanks for that, Nigel. Now, as you rightly pointed out, Ashok Leyland has decided to merge Hinduja Foundries with itself. Now, this is negative for the company because Hinduja Foundries has been loss-making since FY12. It has accumulated losses of over 1,000 crores. And as on FY16 itself, it posted a loss of almost about 400 odd crores. Not just that, Hinduja Foundries has a net debt of almost 450 odd crores. And this transaction entails an equity dilution of almost 3 odd %. But the management came out and clarified to investors that they do not expect Leyland's financials to deteriorate because of this merger. In fact, they say that over the next 2 to 3 years, Hinduja Foundries will become accretive to Leyland's financial performance. This amalgamation will result in operational efficiencies and cost synergies. Now, Hinduja Foundries is a critical supplier to Ashok Leyland. In fact, 40% of Hinduja Foundries' revenues comes from Ashok Leyland itself. And Hinduja Foundries, because it was loss-making for so long, Ashok Leyland was pumping a lot of money into Hinduja Foundries to fund its losses. So in order to end all of that, they decided to bring it under the wing of Ashok Leyland itself and under the wing of Vinod Dasari and, formalize a turnaround plan for the company. Under this turnaround plan, they have hired a new CFO, they've changed the management strategy, and they hope that this is the worst that the company has seen in terms of earnings, and it's only upward from here. However, in the very near term, Ashok Leyland's growth will suffer. The profits could fall in excess of 40% if you merge both the companies. The EBITDA will fall by 1%. The sales growth post the merger will hardly be about 3 odd % or so, and the net debt for Ashok Leyland will increase to 2,100 crores. Most brokerages are still quite negative on this merger. Motilal Oswal says they expect an EPS cut of 8.5% for Leyland due to the merger, and IDFC Securities says that the move is a step backwards and a clear negative for the stock.